So this video may be a bit controversial. My name's Al Pickett. I'm the founder of the Blackprint, where I work with people on methodology and psychology as it relates to the financial markets. And I just want to share a quick video on how not to get caught up in the hype and hope of meme coins and any other type of investment, just so you have mental frameworks. And there's also going to be a video attached to this that or in my bio that you can go to and learn a simple process. All right. So let's get straight into it. Bitcoin. I think Bitcoin is great, right? Where it is 95,000. It's in a very what we would call a discounted place. So for long term, from a long term perspective, it's in a great place to be buying. Let me also say I'm not a financial advisor. This is educational information for you to do what you want to do with it, and you assume all the risk with decisions that you make after this. Again, Bitcoin's in a very discounted place overall, and is great for a from a long-term perspective. That doesn't mean you bet the house. You always have to be risking what you can afford to lose. Now, that aside, let's look at some of these other coins that were popular and people were pointing out. But before we do that, this is Shibu. But before we do that, let me show you the kind of how these markets work, right? There's the smart money phase where stealth, you don't really hear anything about these instruments or opportunities. And then institutional investors start piling in. And then this is where the trouble happens, right? This is where the public starts hearing about it. You start seeing it on Facebook, Instagram, celebrities, you name it. This is where you really start hearing about it. So when it gets to this place, it's usually better. Think about, you already missed the boat. It's usually, typically, a lot of the times, a high percentage of the times, it's better for you to just step aside and watch what happens. And that'll give you the information to uh, you know, dial back emotionally where you can see what happens, and you start to see this pattern happen over and over and over again. If it's in the news, it's usually too late. And it goes up, boom, 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 and then drops off. Now I'm going to show you the same pattern with a few instruments, and then you just won't be able to unsee this, and it'll be informative for you and actionable for you to know when you should be putting your money at risk. All right. So let's go straight to the charts. This is Sheeple, right? It was being hyped up back in November, December, right? And it's just creating a liquidity. Like when you get in, who are you helping get out? Think about that. When you get in the market, who are you helping exit the market? Because it's just buyers and sellers, right? But when you get in, who are you helping get out? Right? Back in December, all time, close to not all time highs, but highs, and then it drops off. So if you're a buyer at, let's say, whatever, I'm going to just call this cents. If you're a buyer at 31 cents, I'm looking at prices over here. If you're a buyer at 31 cents and it drops to 15 cents, you lost 50% of your money. All right. Let's look at a few more, and then that'll be the end of this video. So Pepe, this was a popular meme coin, or just crypto, went to all-time highs, a market cap of 12 billion. Now it's at 4 billion, and this was just in December, right? So imagine if you bought way up here, you lost half of your money. I don't care if that's $1,000, you lost 50% of your money, right? 1,000 went to $500 or less in a short amount of time. So whenever you see that hype, whenever you see that this is that same thing, when you see that and you hear about it in the public, it's just better to just step aside. This is the stealth phase. This is the phase when nobody's really paying attention, and things are being accumulated. Let's go to, I think this was one. Okay, let's go to this one. Look at this, right? So if you bought at all-time highs when it was being hyped, November, December, or really November, and now it's dropped, it's way down, right? And a lot of times people will continue to add positions, add positions, add positions, thinking that it has to come back up. Well, you can die before it comes back up. So it's better to just buy things going up if you're going to be a buyer, right? And then know where you're going to get out of those things. Let's look at. Oh, this is controversial, right? Trump. Look at this one. This was he's president. He's the president, and it's got to go up. Look at this. You go look at the act. This is the crypto, but go look at the actual coin and see what happened. 74 down to 16, right? So it's following that same. If I go way out or I go way in, all the way up, all the way down. Stay away from that, right? And there's another one more popular right now. I think the Vine is. Look at this, right? So buying the hype usually ends up hurting. Buying the hype typically ends up hurting. And this is your model. This is how you want to think about this. So screenshot it and look for it. You're going to see it over and over and over again. Again, there's a link in my bio for a video on how to find long-term opportunities, a very simple process. You do have to learn uh, the the uh, the common language of the markets in order to implement it. But hey, you're putting your money at risk, and you should. So I hope this video is helpful and impactful, and I would love your feedback. All right, peace.